Yo, guys, how we doing? We're live. And you're live as well. Hey, I think we're good. I just want to get some confirmation from the chat that we're all good. We've got a few people. Well, I've got 35 people in so far. Let's see if someone says hello. If you can hear us, say hello, please. There might be a little bit of lag on this. I'm not sure on the way it goes to X because I've got a tab open with it on, but it's not really loaded yet.
Yeah, I can see us.
Oh, you can see us, yeah, on X.
Yeah, I've got it. I've got it on the other screen. So what I need to do
Cool.
is if I actually click on that and then I click on this, and then
I've got a tab open. Ah, yeah, I got it working now. Cool.
I need to make sure. Yeah, cool.
Tony Orbit's here, Bob's here, Matt's here, Bullish Beaks is here. Nice, good stuff. Right, guys, how we doing? So this is the first time I've had a guest on the stream. Normally I just do these solo, but we're going to have a little bit of a structure to this. We're going to have several different chapters. So what we're going to do is we're going to dive straight into it. Nice, good stuff. Right, guys, how we doing? One sec, sorry, ruined my flow. This is the first time I've had. Where's that coming from? Sorry.
Turned it off. Sorry, it was me.
Was that you? Okay.
Cool. Yeah, I'm trying to get the chat. I was trying to get the chat up, and it's
no worries.
Yeah, it's fine. I'm going to stop. Don't worry.
That's all right. So yeah, we're gonna dive straight in. We're gonna do the usual stuff where I look at Bitcoin, Ethereum, and Solana in a deeper analysis than what we were able to do this morning on the videos. So I'm going to do 5 minutes of Bitcoin, then LSP is going to do 5 minutes, and then same with Ethereum, then same with Solana, completely uninterrupted, so it flows nicely. And then we're going to go into the next chapter, which is going to be about LSP, his trading style. So the reason I'm getting people on these streams now is because I want to just speak to different traders and understand their views on the market, understand their philosophy with trading. And yeah, LSP is a great start to this because we've been chatting recently and we have very similar outlooks. So I think we're going to have a great discussion on that. Then the next chapter is going to be about price action. And then the last chapter is going to be a trader mindset chapter, which is going to be about chasing perfection in trading. So that's going to be a cool conversation to get us going. So we're going to do the introductions afterwards because we just want to get into the charts, and then we'll crack on from there. Okay, how's it sound? Yeah, cool.
All awesome.
Right. Good stuff. Right. So I'm just going to jump onto Bitcoin now and run through where I see today has gone. So this is a big low. I covered this in my video this morning. So this is the big retrace low, and the buying took place from here to send us up to the highs. So that was a key level for me. And then we have the top of this range over here, which is a key high for me because it was holding price down for quite a long time. And then the end of, or the bottom of that range, which is where I think we're going to be headed towards roundabouts. And then sitting on the break of this demand zone, or this retrace point, if you like, is a key supply zone, because this is where the sell-off, it bounced, price retraced, and then the selling continued from this point to send us lower. So that for me is a key level and a key place on the chart. Now, if we jump down to the hourly time frame, we have this big high here, which is where price had tried to push up from. And this is a reaction to this level over here. You can see it's pretty clean, which was basically, we have a drop down, price retraces, and then creates a lower low. So it's taken out this level here. So it's somewhat important, but I wouldn't classify it as something I'd chuck the farm on to sell at. That's kind of this level here at 79K, which I've been looking for it to get back up to. So price is now just taking out those levels and then telling us so far that the momentum is to the upside. We tried to break down below these lows last week. I think this was over the weekend, and then has retraced pretty deep, comes back down over the latter part of last week, and then retraces over the weekend, but has retraced with quite some strength, and now it's taken that level out. So this is kind of looking like it wants to come up to 79K, in my opinion. And then we have down here a demand zone, which is what I call a decision point. where price, the buying took place at this level, the origin of the buying, to push up and take out this high. And then on a revisit of those levels, I will look for some sort of range to form and then a reversal pattern to carry on the long. Or if it is a top, because we are at that higher time frame resistance, if we are at a top, look for continuations on the breakdown of that level. That's kind of how I see that. And then here we have a range, and the way that I mark these ranges is when you have a trend in price, you'll wait for the retrace, and then you'll wait for price to push back up to that retrace point, and then I mark my ranges, and then I will wait for price to give me a couple of breaks either way to tell me which way I want to trade. And then obviously it depends on the flow, the order flow at the time, the momentum, the volume in the market. So for what I'm seeing at the moment is perfect. I wanted to see it range, and it's ranging at a key level. I don't want to take it in the middle of nowhere. So what I want to see if I'm bullish is I want to see price start making some higher highs and some higher lows, and then break out to the upside, and I'd be targeting 79. Otherwise, I'm going to be looking for it to start showing some bearish signs at this point, take out the lows, test this and absorb that level, start breaking through that, and then on a retrace start looking to get short. Then my ultimate wet dream plan is for it to come back up here at 79k as quickly as possible, really, because then it will kind of lend a bit of favor to my idea that at this level price is going to start looking quite exhausted in a higher time frame downtrend, no less. So I'd be looking for a reversal pattern up here, just a series of lower lows, lower highs, and also the market just telling me with some tests of the resistance that it can't, despite pushing up, it can't get any higher. So that's my ultimate plan, and that's what I'd really like to see, but it doesn't depend on what I want, does it? So basically got to wait for more price action, and then look for one of those three scenarios as soon as it comes, basically. So yeah, that's my little section on Bitcoin. So I'll run over to you now, LSP.
Yeah, man. Where's I can still see your screen. Is it my screen or your screen?
You'll have to click on your screen, but
So
I'm streaming your stream.
Yeah. So if I do that, can everybody see my chart? Yeah.
Yep, can still see your chart. Yeah.
Awesome. So well, funnily enough, I have a very similar outlook as you. If I just take you up to the weekly for a second, and I'm going to caveat this by saying, me and Matt have a similar style in the way that we kind of view the markets, but I'm very liquidity based. I'm always focused predominantly on what price is picking up, what it's dealing off, what it's absorbing, etc. And I see that through the chart, right? So, this level down here in the mid 50s is a level that I believe we're probably going to retest. And I don't think, Bitcoin's ready to continue going higher at the moment, and just kind of breaking it all down. If you are not familiar with this chart, it's plastered all over my timeline. If you just do a search for Bitcoin or, dollar BTC, you'll see all the videos up to that point. But basically, this entire move down, right, was created by this point, right? So when we had first high, second high, and then obviously the third all-time high, and then obviously it started to, grind all the way down. And at this point, it's really important to just note something. Bitcoin was never going to continue going higher forever, right? And you have to have that in your mind before you start looking at, potentially buying lower, because this is a pretty significant high and this is a pretty significant low. And the distance that we've traveled is very, very, it's a good distance. So I predominantly focus on capitulation, meaning this last move that came down all the way into this LP, which is what this is denoting, right, was capitulation. It dried up completely. All the liquidity dries up. There's no, there's no bid left, basically. There's no volume, there's no bid, and then it starts to grind the other way. But the interesting thing was the response was quite muted, right? And then obviously it starts to grind back and forth, back and forth. You get the first initial pop here. So first initial pop here, pulls back. And then this is interesting. This is very interesting. I did at first expect that we were going to revisit this 74,519 level, which is an EQ point for me. where there's a lot of volume, a lot of trades, and price has basically hit it once and then it's going straight through it. So I'm of the same mind as you, Matt. To be honest, I think we are going to end up here where this LP is. Now, the first reaction between 75,774 and 79.5, we'll call it. This is the reaction point for me. So if price does get into this, effectively think about it as one full LP or liquidity pool, right? So we could hit the bottom side of it at 75.7 and just maybe start to retrace lower, or we could go into the middle, possibly 2/3 up, all the way up, all the way through it. Ultimately, as you said, I don't day trade or swing trade Bitcoin at all. Like I've been holding Bitcoin for a very long time, so I'm looking for opportunities to buy more, right? Lower. But for me, if it does get up to 79, it's going to be a very, very good opportunity to potentially take an intraday or a swing trade short. Ideally, it does this. Yeah. So this last drop just here, that's really what I would love to see going into this LP and just go straight through it topside. Literally 79.5. That's the perfect sweet spot for me. In terms of lower prices, it needs to break this low. Yeah, so it needs to retrace and get below 70, get below 65-ish, 65, 66, and just negate this. Let me just do this so we can see it properly. So negate this last move, right? So bearish, 79.5 is a good short in my opinion. And then in terms of picking up a buy, yeah, to add to my stack, yeah, if I was looking to do that, I'd like to see price get to 66 or 65, drop a little bit, and then ultimately come down into this level down here, which is 55, which has been my target for some time.
Cool, man. Nice. Yeah, I think it's a good level. It's like bottom of a weekly, well, I call it demand zone. I guess you call it liquidity pool.
Yeah.
But yeah, I think when price reverses major moves, it's down like what 50 odd percent,
Yeah.
and it comes into a deep level like that. It comes into a huge level that painted on the chart for what months on end. It's not just going to bounce from the top of that level, like
Yeah.
the shallow area. It's always going to go to the other side, which is the extreme of it. And that's
Yeah.
kind of why I'm looking at 52-ish. But then that's a level that everyone's kind of looking at and going, oh, this is a really obvious level. So what ends up happening is it overshoots it.
Yeah.
That would also line up with other bear markets where prices dropped 70 odd percent when
Yeah.
it starts hitting that kind of 45 to 50K level. So it makes sense as a bottom around there, in my opinion. But it'd be nice. It'd be nice. All
Yeah.
right, let's go to chapter 2, which is Ethereum. So I'm going to switch to my screen and then I'll run through this super quick. So I'll just get rid of some of this crap and just do it again because I can do it dead quick. Right, so Ethereum on the daily time frame, we have this really big low here, which is where price tried to push up out of this range, drops down below it, and then instead of continuing, this is where the buying fuels this entire move. So this was a key level. And then this level below it was ultimately the target for this down move. And I say that because you've got a nice downtrend here and a series of very clean lower highs and lower lows. And then price here makes the first higher high. And then instead of dropping and continuing the trend, it reverses strong, retraces, and then sends. So I would say this, I call that the origin level. This is basically what fueled the whole move. And price always returns to sender, whether that's on a day trading time frame or a swing trading time frame or a multi-year investment time frame. It's always going to return to like the origin of that market trend. And it's done that. I do think it probably is a little bit lower because technically this is mid bull market, but Ethereum had kind of farted around for a fair bit of time. I think the actual origin is more like down here at about 1,300. But yeah, anyway, so that for me was a really big level because we had this sell off here from the extreme. Basically, this is what I was just saying, where we have this big demand zone. What am I doing? Big demand zone here. And then if we just take that to the extreme, because it sends and it's not just going to bounce shallow, it's going to go right to the end for the most liquidity, comes down right to it, bounces, drops, retraces back into the extreme where the sell-off originated, and then sends back down. So that was where, instead of respecting that market structure of this demand zone and pushing up, it breaks through it, which is then respected at this point when it creates a lower low. But that, so like all the signals from the market are that this is going to go lower, but then it completely reverses. So that's a really clear map for me. And then we have, on the break of this demand zone, we have a key supply which price is now coming into. It's like ripping into it in this time frame, which is nice. And then the next key level is just the next one for me on this time frame, because I think this would, if this was to remain bullish and start testing this area, for me this is just going to rip right through it. This is really hollow. So then my thesis on supply and demand trading is that when you break supply, you're going to look for the next area of liquidity, which is the next supply, which is all the way up there, which means all of this is just empty space. So as someone with bearish bias, I want to see this level hold price down, because I still want the market to drop. At this point, if it flips this level, it changes the market structure on this time frame, not a higher time frame, in which case price is free then to move back to 3,000 in my opinion. But we'll look at that on the lower time frames. So if we can now refine the level a little bit, and the end of this chain is up here. So I would expect, again, just talking about the extremes of levels, if I'm marking a supply zone traditionally, I'd probably mark it like that. So it's a very big supply zone. That's where it drops, it bases, and then it drops through. But I like to mark the extremes because that's where the biggest liquidity is. So what I'm looking for is for price to come back up here. And this is then, because of that change in market structure, if this level breaks, this is then kind of last stand for bears. And that's why I think price is ripping towards it to get people horny, to get people excited, but ultimately just to drive the liquidity into hopefully what is going to be a nice area for sells. So then we have this high here, which basically was holding price down. And then if we look on the hourly chart, we have this demand zone here, which is continuation level, sitting on the break of that previous high. So that's kind of the line in the sand for me as well, because if price comes back down before hitting this resistance, it needs to hold, and I think it would before it hits that resistance. And then ultimately, I think it'd be sending to up there. But the way this is just ripped, I think it might just keep continuing, which I'd like, because that would then add weight to my idea again that we're probably going to exhaust up here. I'd look for a reversal pattern and then look to short the market back down. Or, if it just fucks around and I can't get any read on it and it's going sideways and there's no reason to step in, I will gladly just wait for it to revisit this level and then make a decision based on the momentum, based on who's clearly in control, and then look to either continue it or reverse it. I wouldn't personally be looking to, if this does flip it, I wouldn't personally be looking to long it up there. I'd be waiting for it to come back down to whatever key levels have thrown in, painted there, and then look for reversal signs. But I'm very wary of the fact that higher time frame, we are still bearish. The market structure is pointing to the downside. So I'm not taking longs at all, just in shorts only mode. But this level, I expect, it's a nice continuation level. It's a nice range that has formed kind of in the middle of the extreme of that supply zone and then the previous key supply zone, which was the extreme. So this is, in my opinion, a lot of empty space to travel through. So I do expect it to come up there. But, it could also end up just ranging here and being a fake out of these highs. And then I'll look for some signs that it wants to break down. So I'm not really sure what it wants to do. I wish I did. I had a crystal ball because I'd be richer. But yeah, I'm looking for that to either exhaust up here ideally, or just wait to build more price action so I've got more of the story. But the fact that it's moving, we should all be celebrating, because last week was really fucking boring, and this is now like we've had some injection of life into the market. Right, so over to you, mate. I'm going to change to your screen. There we go.
Awesome. For me, let me go up to the weekly for a sec. Yeah, I mean, look, again, pretty much what you said, but I'm going to say it in a slightly different way, right? So this weekly fractal, which I'm going to explain very briefly in a second, but basically this huge area of consolidation where price is just kind of loading up and absorbing loads of liquidity. It's quite balanced. Yeah, so there's plenty of buyers, plenty of sellers, which is an easier way of saying it. It's a bit deeper than that, but back and forth, back and forth, back and forth. And then you get this really nice impulse just here. And then it starts to go. And this is market wide, as we know, right? And Ethereum is showing relative weakness, compared to, say, it's the benchmark, Bitcoin. It should be a little bit higher. If you're actually taking tick per tick, or whatever, pip for pip, however you want to call it, Ethereum should actually be roughly around 2425 at the moment. Right, but it is showing a little bit of weakness. I don't think people are interested in Ethereum as much as they would be, on a sort of holding status. So they're looking for basically trades, effectively. For me, I think, and I don't really trade Ethereum, but I think to explain this fractal, or what I was going to explain. So if I come out like this, and I just show you this point. All of this price behavior, right?
Can you zoom in a little bit more? It's just a little bit.
Yeah. One sec. Let me just do this. So all of this that I've just put in this box, right? That point right there where it picks up liquidity, and then it starts to grind, and it impulses, grinds up, creates this, high, and then starts to come all the way back down, right? Because we haven't broken the low, this pickup over here, right? This entire section, all of this price action, right, has been created and held by that point right here, which means whatever's happening through all of this, because it's a completed swing, the point that you were making earlier, you see, if I do this and I show you, right, that LP over here, so this small area over here, price came all the way back down, completed the swing, and literally hit it to the penny, right? And then responded nicely away from that, right? So when you have instances like this where price does that, right, and it completely cleans out the LP, this entire move that's going up right now needs to hold. If it doesn't, then we're going much, much lower, right? Because price can start seeking liquidity elsewhere, right? So I think we're probably headed for this level to start with, roughly around 2.6-ish. This looks like an impulse to me, so I think we're probably going to at least find some resistance around 2.4, but I don't think it's going to be a lot. I think it's a ramp up, right? So we may get that final sort of pop and capitulation into this level up here, which would be great, because then regardless of whether you're bearish or bullish, it doesn't matter. You are going to get a fade. You're going to get a response. It's not just going to keep going and going and going. So even just on an intraday basis, or even a 2 or 3 day hold, or even a week hold, because this is the daily chart. If you get the next 1 or 2 days and it completely explodes into this level up here, that's perfect. That's a perfect fade for me. Put your stop into the next LP, so just as a completely separate side note, if I just do this and say, price goes up and it just explodes into this level and then starts to fade, your stop can effectively be either here or here, and there's the potential to get at least to this area just here, right? So in terms of risk reward, it's a solid short for me. Personally, I wouldn't be interested in going long on any cryptocurrency at the moment, but that's just me. I'm like super bearish at the moment, like perma bear at the minute, right?
Yeah,
until I see something that changes my mind. So yeah, that's Ethereum for me.
Yeah, that's basically this looks like either a really nice bottom on the chart or like a really big bull trap, because
Yeah.
it did this before it did that big impulse down at the beginning of the year. I think it was it made a few lows, pushed up to the highs, and then completely sank. So
Yeah.
it may be like it's a difficult thing, like when it's a big sort of macro level like that where everyone's looking at it. The contrarian in me is like, everyone's getting bullish into resistance again. The most obvious thing that's going to happen is that it's going to drop from that point, and we should be looking for
Yeah.
sells. And then you'll have a bunch of people going, yeah, but everyone's looking at that level to short. And so that's why
Yeah.
I say it's probably just going to either undershoot it or overshoot it. And in which case you're like, well, what level am I even fucking looking at then? If it's,
Yeah.
so, but this
That's
is
the
why
thing.
I think it's if you watch the price action develop and you wait for the right time, it's really difficult, in my opinion, sometimes if you're putting content out like we're doing, and we are like reactionary traders. We're both day traders where we're
Mm.
waiting. We kind of mark levels where we're looking to do business, and then we
Yeah.
wait for the right price action to develop. And then if it doesn't, I don't trade. And if it does, we take the trade. So it's like, well, it could go here, but it could go there. And then if
Yeah.
it could also go here, but it's like, I
Yeah.
know somewhere around that space, but yeah.
Yeah, definitely. This is why I scale, which we'll get into later, but that's why I scale. I don't, I very rarely just do a one, I'm in, stop, target,
Yeah.
and leave it. I have to
Yeah.
scale because sometimes you have to, allow these things to unfold.
Yeah. Fair. All right. Let's jump on to Solana then. And then we'll
Yeah.
flip to my screen for that. All right. I got some nice fancy flashy chapter transitions. I don't know if you've seen them while I've been doing them, but
No, I don't see them. Yeah, but it's all good. I'm gonna rewatch it anyway.
Yeah,
Yeah, it's
nice.
fine.
All right, so let's do Solana. Rather than actually just drawing it all out, I will just put my pencil on it and then talk about it. So the way that I look at things is just to eyeball what's really obvious at first. If I'm looking at a naked chart, it's no more of a science than, oh, that's a big low or that's a big high. So I've just marked that there, and essentially again it's the same as before. We had a trend that was to the downside, and then this is the reversal point that puts in this high, and then as with every move, it's going to return to the sender, which it does, and it's exceeded it. But to me, I look to the left, and then I see that this is a reaction to this, which is a reaction to this, which is a reaction to all of this, which is a reaction to this. And then that's a reaction all the way to the bottom of that chain, which is here at $52. And it's also a nice level because we had this high up here, which is basically where we got the drop off, and price gets held down by that level all this way. And if you like, there's a lovely cup of tea, cup and handle like that. Super, but those work really well on crypto at the beginning of the bull markets, by the way.
Yeah.
So that's where I think ultimately the target is for this move on this time frame, and maybe lower, but that's a really nice target. It's like about 80% down. So on the break of this low, we have again a supply zone, a continuation level. So it bounces off of the level, retraces, and then the selling sends it lower. So that's the target for this retrace in my mind. I think any move to the upside is a retrace until the market structure breaks, which would be if price continues up and then flips this level, and then it's going up back up to 132. I have a sell at there, an open order, sorry, not open order, an open trade from 130. So I wouldn't like it to go back up there, but I'll be okay if it does. And then we've got this zone here, which is on the break here. After just dropping down the time frames, we look at things a little bit neater. It's not the cleanest levels. Again, I wouldn't sell the farm on it, which is like evident here that it tests it, but it's not enough to send it to create a lower low. And now it's retracing. And then just to go back to, the basic point of any price action concept is that it's just going to be hunting liquidity. And similar to how I got that 52 level, this is all a reaction to this. And this is where the sell-off happened, because you've got this big impulse, which is hollow, but then you've got price puts the base in, which is where we get an equilibrium in buyers and sellers. And then it sends from that point, and rather than reversing. So that for me is the level where if it comes up to it again, I think that's where we'll get some sort of exhaustion, maybe a little bit higher, maybe a little bit lower, but somewhere around this vicinity. And then if we get that pattern, which I look for, where I just look for a range and then look for 2 or 3 lower lows out of that range with some strength on the breakout, and then I look to short it. So somewhere around there. But again, it's a case of we'll read the momentum, we'll read the order flow and everything when we get up there. So on the hourly time frame, we've got this range that forms here, and ultimately I think it's going to come back into this range, but I'm not sure when. I reckon it will probably come up, something silly like that, then come down, then go up. I would love it just to rip up for the exact same reasons as what you've said, where it's just going to be a rush into liquidity. Then it's just going to be getting everyone super horny, and it'll be a really great pace to look for a short. And then this would be the line in the sand then. So if this level breaks either here or after round tripping back to it, if this level breaks, it's below this point again, and this would then be what I would say would be a fake out top, because it's faked the level, it's pushed above that, and then creates new lows. So I'm looking for a continuation on a break of this level, but I don't think I'm going to get that anytime soon. I think we've got clear impulse momentum to the upside, and it's hit a level which has been absorbed several times. Again, I've marked the extreme of it, so the extreme's only been absorbed once, but this has tested it, and this has tested it. This third test, like there's 3 or 4 all in there. So on another test of it, again, it's just there's no selling there. It's all depleted. So now it's going to go higher to look for more liquidity. So that's what I'm expecting. And then my ideal scenario is it comes up here, it exhausts, and then I can send it back down, and then finally send it down to $50 fucking.
50 cents.
Yeah. All right, let's get your screen up, bro.
Yeah, man. So for me, pretty much the same. But what's interesting about Solana is that it is showing incredible weakness compared to the entire cryptocurrency market that at least we track, right? So when you're looking at Bitcoin, when you're looking at Ethereum, etc., you know, the response from down here from the recent drop, you know, over the last sort of 2-3 months is very muted, man. Right, this is a very muted response, and obviously this red line is literally just denoting the previous low that was taken out, which was very aggressive. Obviously it was just following along with everything else. This for me is it's not even the line in the sand. I'll be honest with you, I don't think we're going to get there. I don't think we're going to see 117. Right, I think probably what's going to end up happening, if I just take you to the daily, is this LP right here, or this area of liquidity, which has multiple levels to it. It's almost like an inverse point. So the red line, price goes through, breaks the low, starts to go sideways. It feels like it's loading up, but it's not. For me, there's no liquidity in the cryptocurrency market at the moment. I track COT data, I look at everything, right? And there's almost no liquidity. So any violent move to the upside, right, isn't going up on momentum. It's not going up on buys. It's not going up on what you would believe to be a fluid market, right? It's just going up on air effectively, right? And we know that the cryptocurrency market's manipulated. So I want to see pretty much the same thing that we've been saying all night. I want to see an explosive move to the upside. I don't really want to see it past this point, basically. Like 106, I think 100 will probably get a little bit of relief. But if it goes through 100 and it just explodes, you know, then it's going to stop somewhere around 110. I don't think we're going to get up here, to be honest, because I think at that point, by the time Solana gets to what we would say 110, or even up here at 117, which is the low point just here, you've got to think about where Bitcoin's going to be. You've got to think about where Ethereum's going to be, and some of these other sort of larger coins. So I think Bitcoin's going to get there first if it goes right, and I think Solana's just going to be like very muted in response. And then as soon as you get the reversal on Bitcoin, this is just going to tank. You know, so I think you're very close to your 50, to be honest. In terms of what I'm looking for, not much. You know, I'm not interested in, you know, like I don't trade crypto that much. But if I was to do anything, it would be a scale from 106 to 110 for a short, and then I'd be looking to target this down here at 90, just as a pure trade, right? Now, obviously, I'm not going to get that in one day, right? I'm a scalper next level, right? But if I was looking to basically take, you know, a sell and a hold, that's what I'd be doing. I'd be scaling in from 106 to 110, picking my moments, waiting for a nice little reversal, adding to the position, and then looking to basically take it into this impulse, where the impulse is down here, that secondary pop, roughly around about 90, I think would be a great target. And then obviously if you're going to hold, and you know, if it gets to 90, it's probably going to get to 50, to be fair. So that's Solana for me, man.
Yeah, I think the next time it starts testing those lows again, it's going to go.
Yeah.
But
Yeah.
it was due some relief. Like everything was due some relief because
Yeah.
Bitcoin had dropped like 35% or something within the space of a month, less than a month.
Yeah.
And then we've been ranging for what, like 6 weeks or something, maybe 7 weeks. I don't know.
Yeah.
So
Yeah. It's been a
it's due
while.
to retrace. Yeah,
Yeah.
it's not. I always would think it's where there's less buying interest, it's just going to drop through, but it doesn't. It just kind of seems to hold. And
Yeah.
yeah, it looks like a classic sort of textbook move to find some liquidity now. I would like it to go up and spike
Yeah.
that bottom level about 100. What is it? 101, 102, somewhere around there. Yeah, like it seems like if it puts in a big rip up into the extreme of that level, it's going to almost V reverse back down. In my opinion, it's like one of those types of
Yeah.
levels.
I mean, you could even go as far as to say, if you just take this entire section here, and let's break it down on the hourly, say, right? So I'll just do this one sec. So this bit here, right, just to kind of look and see what's in this. I mean, there's the way that I do this, at least the way that I've been, you know, I've studied, you know, liquidity and everything. You see, it capitulates here. But what's interesting, this is really interesting, right? It capitulates on that big drop, right? Meaning liquidity dries up and then you get a really nice response, right? Great. But then it comes down and it tags the low again. Yeah, which is very weird for capitulation. Yeah, this is my point. Like it's super manipulated. There's no volume. There's no volume sustaining. So there's nobody bidding effectively on Sol. And then it goes up a little bit. But here's the part that's very, very interesting. Remember, as price goes back up, it's hitting all of this, right? So all of this price action here, right? As price up to this point, and then obviously it pops, you know, and really goes. But all of this here, right? Price is going to hit this on the way back up as it has been doing. So as price is going up, it's going to hit the 90s and then 90, whatever, then 100, then 100, whatever. There's no liquidity here. The way that price is behaving, there's literally no liquidity here. So it is very likely that we get that pop into sort of maybe the mid 100s, right? And we'll see what the defense is of $100. I think it's going to be quite muted. And I think if it does go, it's going to go through that. And then we'll probably get a response about 105, 106. First response anyway.
Yeah, it seems to me like there's going to be on a higher time frame another impulse down, like as a sort of last leg down, and
Yeah.
it seems to me that this is just going to sucker in a load of liquidity for that. I might be wrong, of course. I've got my levels on everything where if it flips them, then I start thinking, hey, shit, I need to buy back into crypto. But
Yeah.
looking at that as a price action structure, to me, that is not a complete swing down. It's like
No.
it's made a lower low on the, yeah, compared to that next low.
Well, look, I mean, you could take it as this, Matt, right? So if you say the impulse starts here, right? So there's the origin of the move, right? And you know, you've got your price pause, you've got a secondary impulse, there's your peak, and then you have a secondary peak, which is basically picks up sell side, comes all the way back up, revisits. And then this bit right now, effectively, you're going to get, in my opinion, we're probably going to get this, right? So price may do something like this, and then we're going to end up right back down to the area of impulse, and that will complete the swing, right?
Yeah.
So, you know, it sounds aggressive when you're doing this and you're looking at the chart, you're like, oh my God, like what, 30, 40, you know, 10, I mean, it's like $20, right? But why on earth would Solana go back to $20? But like, why not?
Yeah, exactly. Yeah. The price action says it. It's like
You know,
if
that,
you ignore the price on the actual right, then just
yeah,
look at the candles. It says that.
yeah. And that's what I go with until something changes, until I see a dynamic that says, right, there's no LP, there's no
Yeah.
liquidity. It needs to go and find it from somewhere else. In your
Yeah.
case, a supply zone or a demand zone, etc. Yeah.
Yeah. Cool, man. Right. Let's jump onto the next section, which is going to be about you now. It's all about you. So
It's all about me.
that's right. Yeah. So chapter 4 is about your trading style, and then I just want to know a little bit more about how you got into certain ways of looking at the charts. Most obviously the price action, but yeah. First, can you just give a little intro to who you are, how long you've been trading for, what you
Yeah.
trade? what your
Yeah,
favorite
yeah,
color
yeah.
is, what your
Yeah, man.
favorite food is,
Purple,
whatever.
purple, Greek food, loads of meat. So yeah, I mean, look, it's an interesting story. I've never really said this openly, in terms of the actual how it actually happened. But I started trading when I was 16 on my brother's account, and I'm 46 now, so that's a long time, right? So almost 30 years I've been trading, and the way that all of this came about was we were in town in Mansfield, right, just chilling out, and my brother found a pound coin, right, in one of those old, the BT boxes, the
Oh
actual
yeah,
phones,
yeah,
proper
yeah.
hard phones, right?
Glass ones. Yeah, yeah.
Yeah, 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 and he bought the Financial Times. I have no idea why, and there was an advert in there at the back of the Financial Times of two brothers, that had done really well, blah blah blah, and they were selling something, obviously, some sort of feed or whatever it was. So that was it. He was like, we're going to do this. We're going to start trading. And I was like, whatever, man. Like, I'm 16. I don't care, right? I just want to go and play rugby, right? So yeah, he opened an account with. I think it was Charles Schwab at the time, and then we opened a secondary account with TradeStation. And the very first trade that I opened was on Cisco. So we opened this trade on Cisco. We lost 5 grand basically. And I remember the moment of thinking to myself, if I lost, or we've lost this 5K, we could have made $5,000, right? So it just kind of went from there. And I think in terms of where I ended up, right, my character is I'm a very quick thinker. I don't like dilly-dallying around, and I hate holding things, and I'm so impatient. I'm probably one of the most impatient people you will ever meet, which is it spills over into my trading next level, to the point where I literally cannot hold trades for longer than 10 minutes. I just can't do it, right? And I really, really struggle. So that progression kind of went from there to where I am now. And there's been a huge story along the way. I was trading for a prop firm at one point. I was managing other people's funds. There was a horrible up and down period, where I started in one place. I lost a ton of money. It took me ages to understand what was going on. I was very, very lucky to come across a guy the prop firm that I was trading with at the time, one of the top traders there reached out to me, and he says, look, he says, you're almost there, right? He says, but your timing is completely off. And he goes, and you've got no patience to scale, right? Because this guy was like huge scale. He was scaling into positions, 20,000 shares, 50,000 shares, like insane. I've never seen anything like it, right? So he took me under his wing. Stas, his name was, spent a good 2 years with this guy, understanding market makers, time and sales, all of that good stuff. And I think over the years, just becoming so in tune with watching time and sales, right? I can't stress this enough. Nowadays, people just look at charts, right? And I guess the closest that you can get to doing what I was doing back then, with today's kind of way with like prop firms or with brokerages and etc., is things like the DOM or bookmap, these types of things where you're kind of watching the flow of the market, you're watching the orders, you're seeing how things are moving around, and then being able to understand that moment, right, where something's happening. That price is it's picking up, or it's slowing down, or there's certain market participants that are being a bit funny with price, or I'm sure you've heard the word iceberg. Back then it was just a large order, a large market maker basically front running or stopping or holding price, and then they pull the orders, these types of things. And I just became accustomed to seeing all of this over and over and over and over again. And then that transposed over to the charts. And the interesting thing is actually, because it's funny that you track supply and demand, because one of the very first videos that made it click for me was a video by Sam Seiden
Sam Seiden, yeah,
from
godfather of
Trading
supply
It.
and demand. Yeah, yeah.
Yeah, from Trading Academy, and actually went down to Trade Academy. This was in Norwich, actually, when I was living in Norwich years ago. And I drove to the main offices up there, and he was there, and I had a really good chat
Oh,
with
no
him. And I
shit.
went to one of his. He's really short. He's actually really short, really stocky. Right, he's a really nice guy. And I ended up having a really good conversation with him, and that's when it clicked for me. It's like, if I can take what I'm seeing on time and sales, put it on a chart, then that means I will be able to do the supply and demand, so to speak. The reason that it kind of transitioned into what it is now is because I was getting so frustrated that the levels were just too big for me, right? It made no sense because with my impatience, right, and watching price moving around, for example, on a 4 hour, it's like, oh my God, it's like watching paint dry. Whereas I wanted to be able to get in and see things. So I moved over to Elliott Wave, right? So Robert Precher, I think his name was at the time. I bought all the DVDs and I was doing all of that, just constantly just going into Elliott Wave, which was interesting because I understand mass psychology. I understand, I love all of that stuff. I love contrarianism. I love, kind of trying to understand what people think and, the way herd mentality works, etc. So Elliott Wave does have some weight to it, to be fair. So it's a kind of culmination of everything. All of these ideas, Elliott Wave, supply and demand, people that I've spoke to over the years, has culminated into this understanding, right, of seeing price based on what is actually happening. So I'm able, for me anyway, some people might say I'm full of shit, but I'm able to look at price and know where a big order is. I'm able to look at price and know what people see on the DOM or what people see on level 2 or what people see on the bookmap, for example, right? And I've proved this. I've proven this time and time again, live, in a live setting, because you don't need all of this other stuff. It's good and it's nice to have. And I'm not taking away from any of that, like for example, the book map or the order books, right? This is, very, very interesting stuff. But I just can't be bothered to look at all of that. I'd rather just see it on the chart and just execute,
A visual person rather than like numbers. Yeah, same.
100% visual and auditory, right? So when me and you were talking earlier, or when you were talking actually, right, I was watching the NASDAQ spike, through 24/8 on the futures, yeah. And I almost hit the sell button. Yeah. But I'm like, I'm on a live stream, chill out, calm down, right? Because I know it's going to hit it, probably going to get a spike through about 820, right? And then it's going to drop like a tank. And that's exactly what's happened, I wouldn't have got the whole move. People know this about me. I would have taken 30 pips, I would have been done, or 30 points, right? But the point is, seeing that price exhaustion, right, is a combination of all of the stuff that I've said over the years. And I am super, super anal, right? I used to record 24 hours of price action on the Euro USD, right? And play it back, and I would take snippets. And this was back at a time when Camtasia was not that great, to be honest. Camtasia was really put like TechSmith, Camtasia. And I would just leave it recording all night, going into the next day. And then I'd go back and it would take forever to render. It was so bad, right? And sometimes it wouldn't render at all. And I had to watch it, I had to watch it through Camtasia, and it was a nightmare. But
man, we are blessed these days with the amount that we've got access to data packages, software, platform. Like, it's crazy. People don't realize, like, even just 10 years ago, you couldn't get like MetaTrader on Apple software operating system.
Nuts.
Like, if you said that to someone now, they'd be like, "What? It's all, nah, surely no."
No, they don't get it. I used to use code. I used to for MT4, because I used to code E8s, right? I used to use code weavers. If anybody's listening and knows what code weavers is, right? Code weavers is basically an emulator. So you put it on. I used to install it obviously on the Mac, and then it would allow me to run MT4 using CodeWeaver, right? Because it would kind of emulate a Windows environment, and and this is the type of crap that people just don't get it, man. These youngsters nowadays, they are so lucky, man, so lucky. But I used to draw charts by hand. I used to draw on the walls, man. I used to everything that I could get my hands on, because I needed to understand. But there is no substitute for experience. And this was why I used to record everything. I wanted to go back and I wanted to actually watch how the Euro USD was moving around. And then I transitioned over to cable, which is pound USD, obviously, as you know.
Unfortunately, I know it very well.
It's just the worst, man. Right now, I can't even look at it, without getting angry. It's so slow. But when you're swing trading, it's really, really good. Forex market for swing trading is a great place. It's a good spot to be in. But for me, the way that I trade now, it's too slow.
Need the action.
But I need the action, and that's kind of how it all went. It's been a very interesting journey. I've had a lot of ups and downs. I've been screwed over many, many times trading other people's money. Not being paid performance fees, at the time. I was living in Cyprus. But I've had. It's been a very interesting story. It's a very interesting story, and it's when I say it out loud, I remember the feeling of some of the things that happened to me back then, and it's not nice, man. Like, it is not nice.
I know what you mean, man. It's, I would say that trading will bring you to your knees before it will take you to the promised land. It's a quote I got from a guy from a Facebook group about 10 years ago, but it stuck with me because it's so true. Like, I've had moments, and I'm sure you've had many the same, where I've literally been like on my hands and knees punching the floor, screaming. And you look back at it and go, what the fuck was I doing? But it's part of the process, isn't it? I think like
Part of the process.
everyone,
Yeah.
like whether it's a snapped keyboard, you've lobbed your mouse at the wall, or like your water bottles, just like
Yeah.
anything where you feel like I don't have it now. I feel like it's almost like you've got this store of like bad energy and bad like
Mm.
trading demons in you. And the only
Yeah.
way to purge it is literally just to like fuck up so much that you get
Yeah.
so angry that it just releases in some way. And then
Yeah.
eventually you do something stupid and you just go, and then like,
Yeah.
you might end the day trading and then come back the next day, whatever process you have. But it goes fully from like the worst rage you've ever had
Yeah.
to just kind of acceptance that you've
There's
made a
levels.
mistake and you move on. Yeah.
Yeah, there's levels of rock bottom. People don't get this. This is something that I've tried to explain to people for years. You might hit a certain plateau, right? Or you might hit a rock bottom that you think is rock bottom because it's only relative to your situation, right? At the time when I was losing money, I had plenty of money because I had loads of businesses that were making money before 2008.
Mm,
2008, everything went to shit, right?
yeah.
But before that, I had loads of money, everything was fine, and I just kept throwing money into it. So my rock bottom wasn't rock bottom. It was literally just I'm losing money and I'm getting angry and frustrated. And as you said, I smashed up my computer multiple times. I can't even tell you how many screens I've gone through, and headaches and all that crap, right? But then the actual rock bottom was after 2008 when I lost everything, and some of my mortgages were on LIBOR rate, so it shot up like fucking triple at one point.
Yeah.
So every 3 months it just kept changing, and then it moved it to a month. It was just horrible. So I ended up moving abroad. Obviously, I went back to Cyprus, and at the time, I remember, and I have no quarrel saying this. I'm a very open person, right? And I'll tell you exactly what happened. I was sitting outside the house in Cyprus in it's called Diplo Gambino in Greek. It's like a pickup truck, right? 3 o'clock in the morning, crying, right? Because everything's just I'm rock bottom, right? And I'm looking for pennies, scraping pennies. Or I was trying to find euros to go and buy some milk the next day, which is stupid. This is how stupid it is, because at the time when you're going through something like that, you don't realize how bad trading actually is for you
Mm,
if you allow it to just decimate you, right? But at the time I wasn't thinking. It's like I know everybody in my village, like getting milk the next day is really not going to be a big deal, but I just wasn't thinking, and I was a mess. But that was a good rock bottom for me. I needed to go through that, because that's when I finally realized it wasn't the charts, it wasn't the money, it's none of that. It was me. I was
yeah.
the problem, right? The pressure of having to deal with all of this crap, it just took a while. But going out to everybody that watches this, if you're new and you're a beginning trader, do not, right, make the mistake of believing, right, that you are smarter than the market, or that even if you are seasoned and you have made plenty of money, or yet you found your consistency, or you might think you're there, just remind yourself every day, I don't know anything, and at any moment the market can literally just take everything from me. And if you remember that, keeps you humble, and it may save you, once or twice.
Yeah, yeah, for sure. The thing with it as well is that one of the not it's just once you've been through it a certain amount of times, you can when you see people online that have been I've been trading 3 years and I've cracked it and I've made X amount of money on a prop firm and
No.
like come buy my course or anything. It's like I've been through that exact same phase. When
Yeah.
I was been trading 3 to 5 years, I thought I'd nailed it. I thought it was like riding a bike or driving a car. Like I've got this skill set now. And
Yeah.
whatever I do, whenever I open the charts, every month I'm just going to make money because boom, I've learned it and it's done.
Yeah.
And then you will have a period of time where the market humbles you again and you will
Yeah.
realize that you knew fuck all. And you might like your good period probably coincided with a good period in the market. No matter
Yeah, of course.
what asset that is, it could be crypto,
Yep.
it could be stocks, could be commodities, whatever.
Yeah.
And I had the same thing with Forex because when I was learning between like predominantly between 2015 and let's say 2018, the
Mm.
volatility was crazy. Like you'd get a
Nuts.
news event and
Yeah.
it would go 400-500 points off of news
Yeah.
like back in those days.
Amazing. Best days,
And
man.
yeah, it was sick. And then once that all dried up and I went full time, uh, everything was moving slowly. My patience like
Mm.
got really shot, and that's when I started moving down to the lower time frames. But yeah, the markets were great then, and I thought, okay, you had that initial learning period, and then you have
Yeah.
a period of profitability, and then you might have a period where you scale back a little bit for some losses, and then you go make higher highs with your P&L, and you're just like, oh yes, I am the fucking man.
Yeah.
And then that's when there's some trading gods up there is like, oh yeah, are you now? Like, let me show you
Yeah.
something.
Yeah.
But yeah, I think everyone kind of, it's like a rite of passage, and I think people who come to
It is.
trading, they have different. We all have like a similar kind of, I guess, like a common trait is that something inside traders, like retail traders mostly, something inside of us is broken, and that's what leads us to
Yeah.
trading. And to
Yeah.
go back what you were saying about how trading gets you in this really, really negative state, and to the point where,
Mm.
like you said, you're literally scrambling on the floor for coins for milk.
Yeah.
But
Yeah.
because it's so enticing in that the win is right there. Like whether you've taken a win or you've taken a loss, or whether you're watching the
Yeah.
chart, it's right there at one click of a button, and it could transform your life in literally one or two candles.
Yeah.
And the fact that it's right there
Mm.
is essentially exactly what
Scary.
every casino as well
Yeah.
plays on. And it is scary because that's when people will lose everything, because they know, yeah, I might be one decision away from losing everything, but I might be one decision away from like gaining absolutely all of my dreams. And
Exactly.
yeah, I just think it's
It's it's a
it's a
psychological
difficult one.
dynamic,
Yeah.
I'll throw this in because I think it's really nice to hear, right? That you said it yourself, right? The market dynamic, right? The way that the market shifts and is fluid and it changes continually, right? You may think that you've arrived at a certain point because your particular skill set at that time has worked for X amount of months or even a year or 2 years. But the problem is the experience of the market itself going through the ebbs and flows and its own cycles, microcycles, macro cycles, etc. You haven't experienced. You need a good 15 years, right, to go through all of that, really, to be fair, right?
Yeah.
And to kind of experience enough to know that your system or methodology will work in a lot of different environments. And this is what was pissing me off. It drove me crazy, and why I refuse, because when I tell you I hate losing, it's so deep rooted, right? That if I see red if I see red, I can't deal with it. Like I literally, it's taken so long for me to accept, right, that there is red on the screen. It's ridiculous, right? But
Have you tried changing
this
the
is
colors, like as a psychological thing?
everything. Like at one point, I was using a line chart, man. I mean, it was just absurd, and I took the P&L off, and then I was just looking at the pip count instead of whatever. I've tried it all, but the thing with me is like I got to, and this is going to how serious you need to be if you want to become a profitable, consistent trader over a long period of time. You have to do things that are in line with your psychology. For me, it's I hate losing. I hate holding trades. So what can I do to eliminate as much of that so-called experience that I need, or having to go through so many different market cycles? How can I reduce that as much as possible? Lower time frames, right? So I started, sorry, not lower time frames per se, but less movement. So I started to realize, okay, there's a sweet spot for me. If I can get, say, 20 or 30 pips, which I was always looking for 30 pips. At first it was 50, then it was 40, then I went down to 10, and I found the sweet spot at 30 pips, right? And literally all I would do is I'd open a trade. At first 10 pips, I got break even straight away. And I either got the rest or I didn't. Half off, break even, done, right? And that was literally my trading for years. And that eliminated so much psychology, fear of loss, not wanting to see red, not having to deal with like massive swings, etc., etc., etc. Right? And you need, for example, a full year of data to see one full swing on a massive time frame, on a really, really higher, on a higher time frame. I can see that multiple times every 15 minutes. Yeah.
Yep.
So why not take advantage of the intraday volatility? And
Yeah.
that's when it clicked for me. I was like, right, that's my sweet spot. This is where I need to be. And I think I found a groove. Like I've been like this for years now.
Yeah, nice. Yeah, I think going back to your point where you said about weaknesses, and
Mm.
instead of trying to change yourself, it would be like, how do I just like accept these weaknesses and then trade around them? I think that's a really key thing,
Yeah.
because I
Yeah, it
had the
is.
exact
Yeah.
same thing. Like I had major problems with revenge trades. I had a really bad like time just accepting the loss and accepting that I'd done
Mm.
something wrong. And I had to, like, my mate is a pretty decent coder, and he did something where he just like locked himself out of the system, and he said to me, "Do you want me just to code something for you where
Yeah.
once you've hit 2 trades a day, you just can't
Just
trade anymore?" And I said to him at the time, I was like, "Look, it sounds good, but I know that problem's not going to get fixed, so I need to kind of
yeah,
work on it
it's not.
somehow." But there are certain things like the patience thing as well, especially when I went full time, like going from H2, H4, and H1 charts primarily,
Mm.
and sitting in the positions for like 10 to 14 days on average. And
Yeah.
then suddenly you've got all this time to yourself, and then you're looking at the 15-minute candles just to see like, oh, what's this next H1 chart going to close like? So to curb that,
Yeah.
I ended up jumping on to M1 and being more active, and found it actually suited my personality more. But yeah, I didn't
Yeah.
change anything of myself.
Yeah. Yeah.
But yeah, same thing.
That's the thing. You can't change yourself. You know, you just can't. And you know, prop trading, intraday trading, day trading, trading live, trading your own account. All of these have different dynamics. They're all different. The problem is with this industry, besides all the scammers and all the shit that we see online, and these clowns out there. The biggest challenge in this industry, right, is getting people to understand that they need to stay in one place long
Yeah.
enough, right, to allow whatever it is that they're doing to unfold, so they can get the feedback and say, right, is this actually working? And they don't want to do that. No, who wants to do that, right? Who wants to spend 6 months hard data grafting to get to a point where you might not even be that type of trader? Nobody wants to do that, man.
Yeah.
And
Yeah.
imagine doing that 10 times, you know, or 15 times or
Yeah.
30, whatever, however long it takes. Nobody wants to go through that grind. They just want it now, you
Yeah.
know,
That's
and it's,
a really good point actually, because I think one of the things that takes trading, it takes so long to get good with trading, is because, let's say, even if you've got the perfect strategy where it's like you take this and 9 times out of 10 is going to
mm,
win, um, you're gonna, and like I've given you the pattern, right? Okay, here is the exact pattern, and this is how you trade it. And then if you start trading it, you're gonna see like a textbook example of it, but there's gonna be
mm,
like 100 different variations of that exact pattern due to the
absolutely.
volume, due to like where it is on the chart or
Yeah.
whatever. And you're gonna but my wider point was that you're gonna have to go through like multiple different iterations of fucking up. So
Mm.
for example, I'm gonna use my stop loss, let's say 10 pip stop loss. And then you have to go fuck that up 50 times to realize actually maybe it needs to be 11 pip stop loss. Like that's
More.
the minute detail. Yeah, yeah, you know what I mean though. But then
Yeah. Yeah.
you've
Yeah.
got another like hundreds of other problems like the same way, like
Yeah.
execution time. How do I do limit orders? Do I mark it
Yeah.
in? Like do I like where it's just like a multitude of different things, and it's
Yeah.
like opening, it's like having 1,000 folders, and in each one of those folders you've got 100 other folders, and you've got to
Yeah.
sort through every single one, and then it's like,
People don't get it.
now I'm a break-even trader. It's like,
Yeah,
fuck.
exactly. And that's the thing. There's so many stages to this, and people do not get it. And it's made worse by the introduction of things like prop firms, or, you know, sort of trader gambling, you
Yeah,
know, or lotto sort of syndrome, where, you know, it's made easier to get a bigger payout, right? That's not consistency. You know, that's you maybe getting a little bit lucky or YOLOing in, you know, into something, or even if you take your time. The point is that big payout at the end of it it's not in line with your experience, right? I've earned the right to take the trade, you know, that I was explaining earlier with big size and make, you know, $1,000 or $500 just on off that one trade in about, I don't know, maybe 30 seconds to a minute. I've earned that right.
mm,
Yeah. Through pain and going through all of the, you know, but if you're kind of going through that motion, or you start in one place, and it's exactly as you said, every single problem, right, is compounded by all of the little bits that go with it, you know. And as I was saying earlier, you might go through all of that and realize, well, actually this isn't really for me, you know.
yeah,
I'm going to try something else.
yeah,
That's hard, man. And this is why there's not many traders that actually make it. There's not many traders that are profitable and consistently profitable. You know, when I read things online, I just chuckle to myself. I just think you're full of shit, because like what the way that you're speaking and
mm,
what you're saying is not what a professional trader, right, who's been through hell
yeah,
would say.
yeah,
You know,
yeah.
well, I laugh when I see Anton Creel, right? You look at his eyes and you're like, yeah, this guy has not slept for 50 years.
Dude, he's
You
been
know
looking
that
like that
guy's been
since he
through the
was
mill.
like 20. Yeah, he
Do you know what I
blocked
mean?
me.
Oh,
Actually,
did he?
yeah, I put it was I made it like an actual joke. It was like in his like kind of like um a friendly way, like it was banter like
Yeah,
between, even though I don't fucking know him, but we'd like exchange replies for like several times within like the previous months to it. And then he
yeah,
just got like, I don't know, maybe he was in a certain mood because his conscience was affected by something else that he'd been taking that
maybe
day.
that.
I don't
Yeah,
know. And he took it the wrong way and blocked me. But yeah,
yeah,
um, let's jump on to the next section.
yeah, man.
And this is going to be about our passion. This is going to be about price action. So we're going to talk about price
Yes.
action. So
Yeah.
my philosophy with trading, I know yours is the same, but just to put it out there for everyone who's listening, is that with trading, I believe that you can get absolutely everything that you need from the candlesticks alone. You can get everything you need from the
100%.
price action, and you can get all the like down to like, if you understand the price action, you'll understand how the order book works. You'll understand how the
Yeah.
DOM works. You'll understand how like any tools or indicators that are on the charts that you don't use, you'll understand how they work. You'll understand how oscillators work. You'll understand how moving averages work. You know,
Yeah.
you can understand the volume from just looking at the charts. You don't need a volume indicator to tell you that there's been a spike in
Mm,
volume.
exactly.
So yeah, that's kind of how I wanted to start it, and I understand you obviously agree with that. But have
100%.
you always been a price action trader? I've been trading 11 years now, and I've thankfully always been. I've got a good friend. He still trades as well. Simon, his name is,
Mm.
who got me
Mhm.
into trading, or kind of I was interested in it, and he helped me get into it.
Yeah.
And he had said to me early on in my trading career not to do anything else other than price action. He tried a bunch of stuff and it didn't work. So
Yeah.
I just took his word for it. And I'm so glad I did, because I haven't looked at
Yeah.
anything else. And it kind of goes back to your point that and what we were saying about having, you know, 1,000 different folders that you need to sort through with 1,000 different
Mm.
folders, like subfolders in it. Um,
Yeah.
with price action, it is something that takes an extremely long time to master. But once you're at a certain level with it, I I feel like it's a bit of a cheat code. And I feel sometimes I look at the markets and I'm like, this is so obvious, to the point where
Yeah.
it looks so obvious to me. I'm like, surely it can't happen because it's so obvious, and surely everyone else is looking
Yeah.
at that. But once you get to a point where you've been looking at the charts for long enough, it kind of becomes a sixth sense to you, doesn't it? It kind of
Yeah.
becomes like second
Yep.
nature.
It does. I mean, in terms of the question, have I always been a price action trader? Yes, there was a very short period of time. Again, I mean, most of the people probably listening to this won't even know, who pristine.com is or Velez Capital Management at the time. But my introduction into intraday trading, right, was through those firms, right? And it was predominantly based on three moving averages, the 8, the 20, and the 50 moving average, on really low time frames like the 5 minute, the 2 minute, and the 1 minute. That didn't last very long for me. I think it was like 3 or 4 old videos that I've got on my YouTube channel, which is like really, really old me trading QCOM, right, and Apple. And you can see that I've got the moving averages on the charts, but it was always price action. Not once. There was maybe a week when somebody mentioned to me about negative and positive divergence using MACD or stochastics, right? And I was like, what? And I remember putting them on my chart, and I remember thinking, this is ridiculous. This is a lagging indicator. How on earth, right, can you predict what's about to happen or could potentially happen with a lagging indicator? And I remember explaining to the person, right, that was telling me to put these on my chart. I said, if you put these charts side by side, so you've got your price action and then you've got your price action with all of this other stuff that you're talking about. I said, you can see it here that it was going to do what you're expecting it to do. Why? Because of A, B, C, D, E, and et cetera, et cetera, et cetera. So why on earth would you be using it? It just didn't sit right with me. I literally 1 week, moving averages went, well, let me say that again. The moving averages when I was trading at Velez Capital Management, that was different, right? That was predominantly fixed on my charts, and eventually I just kind of gravitated, but I didn't really use them that much, right? But the MACDs and all of this other stuff, I can't deal with it. Volume profiles, yeah, maybe a little bit. I've tried it, but it's always been price. I've always studied the candles. Have you ever heard of Steve Neeson? Is it no? Not Neeson, the candlestick guy. I can't remember his name now.
Candlestick guy. I don't think so.
The original person who brought candles, apparently that he went to Japan and he was
Oh,
like
like the
rice trade.
Heikinashi, like cheat
Yeah,
sheet
like the
kind of thing. Yeah, I know what you
proper
mean. I
candlestick.
studied them like I when I like in
Yeah,
2015. I studied them thinking like how you're in school, right? I need to study all of this stuff to
yeah,
understand it. But yeah, load of shit.
yeah. But I mean, but what's interesting about that is that when there was a course, pristine.com, right, where the guy, Greg, at the time, who was running pristine.com, he was explaining what we do now back then, explaining the variations of patterns of the candles and what they would, not dojis and stuff. I'm talking about the actual progression, right, of liquidity. But he didn't know he was talking about that. I see it now because I've spent so long staring at charts. And I'm like, oh my God, if I go back to that old binder that I used to have and I was going through the thing, that's what I'm seeing, right? But it's all a culmination of all of this. And yeah, I 1000% agree with you, because obviously I trade this way. You do not need anything else. One of the single best traders that I've ever met in my entire life said something to me. He said, trading is literally a box and two lines. That's it. He goes, if you can learn to master a box and two lines, obviously he was talking in the context of understanding, price delivery and, whatever.
Yeah, yeah,
But he says it's just a box and two lines. That's it. He goes, and then the rest is just down to pulling the trigger,
yeah,
and that's, people don't want simplicity, Matt. They
yeah,
can't deal with
yeah,
simplicity. It can't be this easy,
yeah.
but well, it
It's
is.
yeah, it is.
This
Yeah,
is.
yeah. It's
This isn't. This is the issue. This is easy on the chart. The charts is easy, man.
yeah, like everything I put out is like the most simple of patterns, like just
Yeah.
a simple bull flag, a simple bear flag. You've
Yeah,
just
man.
got price
Yep.
ranges, and then it's either going to break out in line with the trend,
Yep.
or it's going to reverse against the trend, and then it's up to you which way you're going to trade. And
Yeah.
it really is that, because once you see them, like once you see those areas where price just kind of goes sideways and it breaks out, they're
Yeah.
everywhere to like varying lengths and sizes and stuff.
Yeah.
But once you figure out which ones to pay attention to, or where to look for price to go
Yep.
sideways and break out, that's all it is really. And I think the problem is with traders is that it attracts obviously a lot of different people, but I think in general, even though you would look at a lot of people and not agree, traders have a higher IQ on average, like compared to the average person, because we're
Yeah, they do.
seeking something different.
Yeah.
And once you've got something that's kind of like a little bit taps the intellectual curiosity and
Mm.
just kind of separates you a little bit further because you're understanding this like complex world,
Yeah.
it kind of makes people get high on the information and thinks, right, I just need to keep getting more and more and more information, because that's
Yeah.
how we get taught in school and university and stuff. That I just, if I keep taking all this information in and I need to, oh, this is it's the hunt for the Holy Grail. Like, all
Mm.
you need is a range to go sideways, price to break out. But
Yeah. So
we
you need
need
to.
to add layers and
Yeah.
like
Yep.
buzzwords and like that kind of stuff. And
It's
I
ridiculous.
think
I
I
can't deal with that shit, man.
no,
All
I
these acronyms.
I
Whatever.
used to be like that, because I understand like it's easier to say something like when you explain it to people. But yeah,
Yeah.
I had a mentor about 3 years ago, named Brian, and he was a like a quality. He was in QA. It was called like a quality assessment or something like that. He was into
Mm.
like processes and stuff as an engineer, and he
Yeah.
helped me take all of the subjective language out of my edge and make it as objective as possible, so that I wrote out this massive document full of if then statements, and
Mm.
he got it to a point where if I'm telling someone who's completely new, I don't say look for a demand zone to trade like that, like as you would someone who understands it. He said, well, no one's going to know what a demand zone is. That's a subjective piece of language. How can you
Mm.
describe what you're seeing on the chart? Because most people, and I think this is kind of like the levels that you will go through with price action. Most people will see the chart, but they won't like read the information within that zone. For
Mm.
example, you might have something that goes sideways. It might wick several times to the upside, but then close above it
Mm.
still. And people are still looking short, for example. Like there's so many different layers to it.
Yeah, of course
And
it is.
I think that I kind of lost my point there. I was getting a little bit lost.
No, no, you're basically saying about the simplicity, like
Yeah,
that trading is supposed to be
can't be that
simple,
easy.
right? Like, can I, if I click on my screen, right, that we've got on here, can I show you something?
Yeah, I just
Like, if
clicked
I,
on it for you.
or
I'll
Yeah.
bring your screen
So
up. Yeah.
you can see my screen, right?
Yeah.
So this is the Nasdaq, right? And this was the move I was talking about earlier about potentially fading, right? This for me is a short all day long, right? It took everything for me not to take this trade while I was on the stream with you, right? While we're doing this live stream, because it's just silly. I don't want to be paying attention to
It's good
something while I'm
mental
supposed to
practice,
be.
at least, isn't it?
Yeah,
It's like a
yeah.
mental rep.
But what I want to talk about really quickly about simplicity. This move down here, right, is not a short here. This is just not a short, right? So if you take this moment and then you take this moment, right, they are both vastly different. One of them is an impulse, right? So price has come from here all the way down here. Just keep it really simple, right? Price was here, now it's here, and then it's just impulse to the upside. Why, if you're watching it on the day, and price is doing this, and you're like, wow, that is a big move, that's exhausted, I'm going to short it, right? But you've got all of this context, right? Whereas this, if I have to zoom out just a little bit like that so we can see all of it, from this point all the way up to this point into this level, right, where it's basically peaked and it's at a whole number, and it's like that is the perfect short. That's the perfect fade because you have all of this behind you. And if you understand two very simple basic concepts, one is do not short or buy an impulse, right? I.e., try to counter trade it. It's an impulse. Yeah. Keep it really simple. It's an impulse. It's moving. It's starting. That momentum's building up. You don't want to be going against that. An exhaustive move, though, you can do whatever you want with, but because there's no liquidity, it's drying up. So everything's just about keeping things simple, man. As you said, price goes into a level that you've been tracking for some time. It's responded there a few times. Let it respond. Why do you need to get in straight away? Let the damn thing respond. Let it tell you what it's about to do. Give it a few days if you have to. Wouldn't you rather wait 2 days to make £1,000, right, than try to get it the day before and lose 500?
Yeah, it's like certainly for like my experience, if I look back at the person I was when I used to do the completely opposite to what you just said, I would hit limit orders on those levels and just wait for the reaction to bounce. And then if it tests it another 3-4 times, like even if it's kept my stop loss intact, I'm getting antsy. I don't like being in that trade. And I think it's born from like when you see the swing to the left over there where it hit that zone or just fell short of it and then nuked and made that lower low. When it's when you see that at the top, you're like, well, if I've got to hit that level because it's going to bounce like this, I'm going to miss the move. But more often than not, this is kind of something that I realized in time was that I had a FOMO problem where it was like I have to get in as early as possible to get the best risk reward and to like be the most comfortable in that trade as well. That was a really big thing for me, is being comfortable in a trade. Like if I take a shit entry, I'm going to be uncomfortable and I'm going to do a lot of damage. Not even just that bad trade, but like over managing.
That's why I started scaling.
Yeah.
That's what fixed it for me.
Cool. I'll ask about that in a sec because I'm curious. But what I realized eventually was that more often than not, like 90% of the time, price is going to take a long time to reverse or a long time to continue, no matter how bullish things look. And if you miss that move, this is the thing that kind of clicked with me. Let's say you're at a reversal point and you're expecting price to move, but you want to see it build up first. But let's say it does shoot away, then that's confirmed your bias anyway, that trade was a valid trade and that it's going to break away from that level and then continue the trend. So if you had got in that trade, you'd be looking to run it. You'd have a target and it's only made 10, 15% of that move already. So I realized like at some point, okay, if I missed that initial move, it's probably for a reason for a start. It might not be the move. It might be the signal of intent. It might just be like, like a fake out or whatever. But once I've got proper confirmation that it's moved away, it's going to put a continuation level in and I'll just get in on the trends that I've already got higher conviction of now because I've seen it play out. And it kind of helped with my FOMO, realizing that, okay, if I don't get it there, I can get it here at least if all things are correct and everything. But let's jump to that because we're hour and 20 in and I'm not sure how much longer my camera's got battery for. So let's jump into the last bit, which is a trader mindset section. And I'm going to bring up your tweet. Actually, it's on my phone, but I'm going to quote it. So I like to do part of what I want to do with this series where I've got guests on and I'd like to have you on again because we can probably talk for days on end. Is that I want to
Agreed.
get to kind of know people a little bit more and like how other people trade, not
Mm,
from a point where it's like I want to take what you're doing
mm,
and I want to improve what I'm doing with that. Like I want to know how to do a little bit of extra technical analysis or whatever.
yeah,
I'm not interested in that. It's just purely from an intellectual curiosity because I love trading so much. It is a
yeah,
passion of mine. So there's that technical side which we've covered, and then I like to. Obviously, there's a lot of people talking about trading in the industry these days without the relevant receipts to talk about some of the subjects that they talk about, particularly
yeah.
around
Agreed.
trading psychology, because a lot of people want to give the story, in my opinion, of being the underdog and then fighting through the challenges and I'm the top dog,
Yeah,
and they will go
yeah,
through like some cliched stuff, but they
yeah,
won't touch on the real raw stuff. So that's kind of what I
yeah,
want to achieve with doing this,
yeah,
by
yeah,
talking to some real people. So I liked what you said. There is no perfection in trading. The moment you accept this, you can start growing as a trader. I really
yeah.
like that. Could you elaborate on that a little
Yeah,
bit?
yeah. So as we go through our trading journey, anybody who's new, one of the very first things that you'll try to do, is to find this so-called perfection. And it's compounded, obviously, when you see people online going through, these supposed, runs where they never lose money. And we become very selective in our biases or very selective in the way that we see things, right? Our minds look for that consistency continually over and over again. And it's made a million times worse now by AI and algorithms that feed you what you want to see. So it's compounded and amplified in, ad nauseum, or ad infinitum, should I say. So being able to accept that one reality, right? That there is no perfection in trading. You are never, ever, one of the hardest things for any aspiring trader, even if you've been trading for some time, is to accept that you are going to lose money. We don't want to accept that loss, right? We might have a string of, good days. We get to the point where we're like, okay, I can see the red. I don't want that. I'm not going to take it. I'm not going to accept that that's part of doing business, and from a psychological point of view, obviously there's so many variables happening, in that moment. It's like, I don't want to lose. I want to continue to see the green, and this perfectionist mindset kicks in based on all of these things that we've just said, all of the things that we see online. And until you accept that, you're never going to grow as a trader. It's impossible to grow as a trader because that sticking point for you is, I should be able to do this every day. I should be able to make money every day. I will never have a losing trade because these people don't lose money, blah, blah. And you build this kind of blueprint, yeah, and it becomes your base blueprint where you just go forward and you just never learn anything. How could you possibly grow unless you accept the one fundamental truth in trading or investing, right, that has been there since the dawn of time? You are absolutely 100% going to lose money whether you like it or not. It's just the cost of doing business. Once you accept that, everything else just kind of works from there. There is no perfectionism in trading. There just isn't. There may be, I don't want to say it's a perfectionism, but the work ethic. Perfect your work ethic when it comes to your trading. That's what you should focus on, right? Don't try to perfect your trading because you can't. It's impossible, right? And that's really where it's at. That's effectively what I was trying to explain with that, with that
Yeah,
quote. Give yourself room to grow, by taking away one of the strongest biases that stops you from growing.
yeah, I
You know?
I agree. I think it also extends to even the minute things as well.
Mm.
Like I, for example, the technicals. Like I used to mark a supply zone, for example, and I'd be like,
Yeah.
I want to get it like my entry on the exact pip of the
Yeah.
extreme of that supply zone, and then when it misses
Yeah.
it by a couple of pips, I'm like, what the fuck? It should have done this because blah blah.
Yeah.
There is none of that in trading. But also, I think it extends, particularly these days. I think a lot of people probably struggle with this, with the funded firms, is because obviously you've got that 10%. Well, let's say for example FTMO, you have a
Yeah.
10% static drawdown. If you,
Yeah.
I noticed particularly with my trading with them over the years, particularly when I first started with them. Let's say you open a challenge and then you immediately go into drawdown, and then you can kind of see like the sinking sand start to like
Yeah.
take a hold.
Yeah.
And it was almost like, for me, if I don't have a perfect start with that challenge, and I go into drawdown, the
Yeah.
next target is minus 10%, I'm going to lose the account. And it would always be like, if I don't have the perfect start, then I'm just going to, like, it's done. Like, the challenge is
Yeah.
fucked. And if I have a good start, if I start with the win, I suddenly take it a little bit more seriously. But it's a really
Yeah.
weird thing, because the thing with those funded firms, as we kind of touched upon earlier, is like they're like a game. They're not real
Yeah.
trading.
Oh,
It's take 10 shots of something and see if you can pass it. And
yeah.
it breeds like a really bad mindset in relation to trying to be perfect, because
Mm.
you have a set target, don't you? You have like a 10% or a 5% or
Bro,
whatever.
Matt,
And
I've been trading for 30 years, man, right? And I started a lucid challenge, right? 50K challenge.
yeah,
Imagine this. I am a perfect example of what we are talking about, right? I stopped live trading because the markets weren't really, it wasn't really it for me. And I focused on the prop firm challenge, right? The consistency was insane. I've recorded the entire thing from start to
yeah,
finish.
you did very
Last
well
two
with that.
days, last 2 days breached, and I got to the payout. I could have taken I think it's the max payout at the time, because I was $2,830 in profit.
Yeah.
At the funded stage, I could have taken a payout, but because I did not want people online or myself to see a red day, the pressure started to get to me a little bit. Shit that I haven't experienced
Yeah,
since like 10, 15 years ago.
yeah.
But I'm not immune to this stuff. And I said this openly online. So we always have to be ready, for this stuff to happen to us. And we also have to accept exactly what you've just said. When you are trying to develop a methodology or a system, right, based on the perfect entry or the perfect target or the perfect stop, or with your FTMO, the perfect start, etc., you fail before you've even started. Very, very difficult, man. You have to be malleable in your thinking. And to go back to what because you wanted to ask me, and I may as well throw it in now about scaling. That was why I started scaling into positions the way that I do it now. I used to build big positions, but I was always early, and I just get crushed, man. Crushed. Imagine being stuck in a position and you just can't get out of it, and you take a 9 grand loss or a 12 grand loss or a 7 grand. It was horrible, right? But I perfected it to the point where I would draw a level, as you said, and it's like I want it to hit the level first, then I'm going to react, right? And 80% of the time, it either wouldn't go or it would just go straight through it and keep going. And I used to get really frustrated that I was just constantly missing the move all the time, right? So I was like, okay, instead of trying to get a fixed amount of size in this position when it hits that level, just half it, man. Just half it and get half as it gets close, and then just pick up the other half later, and it massively improved my entries, massively, but if I had a perfectionist mindset, always waiting for that line to get hit, it's very difficult to grow, man. You can't grow out of that box.
I used to do the same with taking profit as well. Like, I would have a set arbitrary number of 2.5 or 3R, and it might get to 2.2R, and I'd be like, and it starts reversing, it like puts it in the mother of all wicks, and it's like closes below the previous candle. I'm like, nope, it's not in my 2.5R yet, so I'm gonna stay in this fucking trade, and then watch it round trip
today, man.
like
The very first trade,
stupid shit.
it's horrible, man. The very first trade that I took today, I made money. No, sorry, no, the second trade that I only took 2 trades today, but the second trade that I took today, price was kind of bouncing around on the futures, NQ, and it went through 700, right? So it was 24 700. No, let me see, what price are we at? And I'll tell you the exact time of the entry as well. So it was executions. So the second trade that I took was exactly 20 to 5, right? So at 20 to 5, and I tried to do something that I don't normally do. I moved the stop to break even once I was healthily into profit, and it was bouncing, and it went on a really nice run straight through 700. So basically, I was up 49 points, which is very rare for me, right? I'm normally out by 20, 25, whatever, and I thought, you know what? I'm going to try something again. Why not? I'm going to leave it. So I left it at break even. I went downstairs and I'm pacing backwards and forwards. I know the trade's open. I left the phone upstairs deliberately because I'm like, whatever. I'm happy with the trade, whatever, right? I've not taken any off yet. And I came back upstairs and it popped, and I was like, fuck's sake, man. If I was here, maybe I could have brought it up to
Yeah.
that pivot point or whatever, and I started going through this motion in my head. All of that is me trying to grow as a trader, right? Not change the way that I trade.
Yeah.
Every now and then I try to push myself outside of this little box of not being able to hold a position, because I will never stop working on that. It's pissing me off. It angers me so much, right, that I can't hold trades. So I'm going to keep working on it over and over and over again. But reducing targets, right, and scaling were two of the biggest defining moments in my entire trading career. It just took off from there at that point, because I scaled, reducing risk, and then obviously targets, go for less, use bigger size.
There's a guy on YouTube called Trades by Matt, and which is a great name, and he trades futures, but he preaches something called base hits, where you get in and then you're just taking, like, you might get right up to the first resistance, you might just hit 10 points, and then you just like boom, done, like take that position off and let it ride. But I've had tons of problems in the past with like trying to run trades, and I even had one, like the most recent one I had where I got really disappointed in myself and really pissed off with myself was just before Christmas, where I was a little bit down for the month, and I got into like a really sick trade that ended up running for like, I was like 4R down or something for the month. And my position was up like 9R, and I was like, it's not at the higher time frame target yet. And I think what it could do is fuck around a little bit more and then go up to my target. And so I don't want to bring my stop loss up in case I get tagged out for like a 4R. Oh no. And then it rips up to like my 12, 13R. It was like a 12R target that I had. And it round tripped the whole fucking move. And then I ended up trailing to 1R, just over 1R, and got 1R for it. And that was my last trade for the year, because I'd like, you're a fucking cunt. Like, I should have taken that. Because I take 1% per trade on that account. And I would have been up for like 4.5%, 5% for the month. I would have done my month, and that would have been it. And I instead went into Christmas in a really shit mood with my trading because of that. But even to go back to what you said, like, you've been trading 30 years. I've been trading 11. And we're at very different levels, but even when someone hears that I've been trading 11 years, when I'd been trading 2 or 3 years, I'd look at someone who had over a decade experience and be like, you must be a fucking trading god. Like, everything you touch, like, just you win, and you don't have these problems where like, oh, I know not to do this, so I won't do it. It's actually like, no, I still do this. So I, like, even last year, like, exactly the same as what you said, I would get into a trade. I'd sit there staring at this until my fucking eyes are bleeding for 3 hours, waiting to get into a position. I've got like, my phone is face down. I've got all my apps on my phone, on my PC are closed. I'm just looking at the charts, maybe watching something on YouTube until something sets up. And then I'd get into the trade, and then it would impulse away from my position. It might set a base and then do another impulse. And then I was therefore allowed to move my stop up like a couple of higher lows away, which is usually about break even, that first move. And then one of the really bad things that I did, I'd spent 3 hours like getting involved with that price action and understanding what the fuck is going on. And then I'd get lazy, because I'm like, oh, I'm comfortable now. I can move the break even logically. I'm just going to leave it to do whatever it wants. And then I might jump in the house, go for a piss or whatever, go play with the boy, like have something to eat. And then I'd come back in, and in that time you're like anxious. You're like spending all your energy going, nope, I'm not fucking thinking about that chart. I am not thinking about that chart. And then you're like,
no chance.
Like, fuck, where's my phone? Where's my phone? And like, I'd go back in, and it might have moved like within 10 pips to 20 pips of my target, and then given a really obvious reversal sign, and then dropped back down and taken me out for the break even. And I could have got like a 2R trade, but instead of sitting there, I got lazy, I got comfortable, I just wanted to leave it. But like, I still do all this shit like to this day. And I always say to people, like, and it's true, everyone who's kind of gone through it realizes it, right? That it's not about winning, it's about not taking the unnecessary losses. And you're supposed to actually maximize those moments where, okay, maybe it doesn't run for like 4R, but it might run for 1 to 1.5R. And if you can stack a couple of them up in a week or even just a month, like, you're going to be a profitable trader. But it's the chase for perfection.
It is. The chase for perfection is incredible. You know, I'm more than happy to do this live. To be honest, I've done it live so many times. You know, I can piece together a day, you know, over a trading session of maybe 2 to 3 hours. So from the market open, you know, 2 to 3 hours of nice volatility, you know, on a day that I know there's going to be some pretty decent volume, purely based on the way that the chart looks and some of the, you know, news releases, and just piece together 20 points, 25 points, 13 points, whatever, you know, which I've done live, and I've recorded the entire thing over and over and over and over again over the years. And at the end of the day, if you have a, you know, an average daily range on the Nasdaq, for example, of 400 points, just for argument's sake, right, between let's say 380 and about 480, right, on a normal trading session, especially now, things are pretty volatile. You could easily piece together 80 points, 50 points.
Yeah.
People don't, and this is the thing, people don't actually do the math. You know, if you break this stuff down, it's like, wow, I can actually make a lot of money on a short period of movement. Like, I don't need to be going nuts and holding positions forever. So there's a lot to be said, right, for common sense in trading, because I think is lacking a lot, to be honest, because people are so blindsided by bullshit, to be fair. But,
yeah. And this is kind of like fake need to be in the markets, and the more I trade, the better.
It's just complete horseshit, man.
Yeah. All right, brother. I think we should wrap this up. We've been an hour and 40.
Yeah, man.
And
awesome.
This has been great. I've really enjoyed it. And
yeah, same. I really hope people
talking to you as well.
Yeah, man. Yeah, absolutely. Yeah, absolutely. I you know, it's very rare that I talk to traders online, but if anybody, hopefully people watch this and, you know, they get something from this. You're one of the very few individuals that I've spoken to over the years that I don't mind talking to every day, to be fair.
Cheers, brother.
You know,
appreciate it.
Because we think the same, we've got the same values. You know, obviously you're a family man, I'm a family man, and we're both contrarians, and we both know that we see chemtrails, to be fair.
Oh my God, it's getting so bad.
Don't even get me started. Yeah. But yeah.
All right, cool.
Yeah,
man.
I've really enjoyed this, mate. And obviously, anytime you want to do it again, more than happy, man.
100%. Yeah, we will do it again. All right, cheers, guys. Thanks for tuning in. Thanks for listening to us, and have a good evening. All right, take care,
See you later, guys.
Bye bye.
Ciao, ciao.